Money Morning Live. I enjoyed that show with Nick. I actually enjoyed Nick and Brandon have a different opinion there and kind of battle it out. Hope you guys enjoyed it as well. But the cryptocurrency discussion is not over because we have Tom Gentile coming to the room with Power Profit Trades. And today's focus is exactly that, cryptocurrencies. So keep your screens on, stay in your seats. Let's bring in Tom in 5, 4, 3, 2.
Hey everybody, good afternoon. Welcome to Power Profit Trades. Yep, it's me. I'm in OD Green today. And yes, Eric is correct. We're going to talk about cryptocurrency today. We had a fairly scary sell-off, if you want to call it that. Headlines seem to make it even scarier. We'll get to those in a moment. But you guys know me. I've been around cryptocurrency for a while now. I mean, I started mining it. So, these kind of moves don't scare me because I've seen them before. So I want to be totally transparent with you right up front. Let me tell you something, guys. If you follow the headline hype, and we're going to be showing you some of that here in just a moment, it's a quick way to get broke in this particular type of market. This is the most volatile stuff that I trade. It's the most volatile stuff that a lot of you watching us live, whether you're here on Money Morning Live or YouTube, it's the most volatile thing we trade. And therefore, we have to make sure that we manage ourselves in such a way where these kind of moves don't bother us. It actually tells us, wow, for a couple of cryptocurrencies, I'm getting a better price than I was yesterday. That's exactly the way I'm looking at it. So I'm going to be talking about the big two, Bitcoin, Ethereum. I want to show you price levels. I want to talk about where I even trade price levels. We're going to talk about Fibonacci, Leonardo Fibonacci, and how this all came about all the way down to my latest buy signals in both Bitcoin and Ethereum. And I'm going to share them with everybody here in the room. All right. So we got a whole session to talk strategy, although it is only just a half an hour. So we got to get going. Eric, what do you know?
What's up, Tom? I'm doing well. I'm excited about the crypto session. I just got warmed up from Nick's show, and like I said, with Brandon. But actually, you mentioned some headlines. So let me take everyone through right now some of the headlines that we're currently seeing. We have Bitcoin briefly drops to its lowest level in 3 months as risk assets continue to be crushed. FX Street, we have top 3 prediction: Bitcoin, Ethereum, Ripple, desperate bulls face the axe as Bitcoin pukes before 25,000. These are awful headlines. Crypto News stating Bitcoin price and Ethereum bleed, altcoins take a hit, and the daily hold. The analyst gives big downward price target for Bitcoin BTC as crypto markets turn red. The question is, Tom, you just said something about you got to kind of take the news with the grain of salt on what's being said. So what do you think of these headlines? I mean, it spells out gloom and doom, but is it really that?
Well, I mean, sometimes it's funny. News, if you let news get you, if you let news go in one ear and not out the other, it can cause you to do things at the worst possible time. I've done it before, guys. I'm not going to tell you that I'm oblivious to news, but it's there. It's there to tell us what's going on, and opinion is there too. For me as a trader, as awful as sometimes things sound, we know that the sell-off in Bitcoin and Ethereum is going to be over when you keep hearing about bad news and it stops moving down. And I got to tell you, it's not, I look at it, it's not as bad as you might see. I mean, we were discussing last week in the crypto boot camp that I held. We were discussing last week price action. We were discussing levels. We were discussing even what we like to call worst case scenarios. Now, the absolute worst case scenario, and Eric, you know this, is zero, right? Oh, yeah. There's a very low probability of that happening because this is technology. At the end of the day, this is where we are going to evolve in form of payment, in direct payment. I mean, I could spend a half hour talking about this, but I think that being said, there are some levels that potentially we could pull back to, right? For instance, I mean, take a look at, if we were showing something last week where we were looking at drawdowns, and we had an 88% drawdown off of the first wave of crypto. Second wave of crypto, 84% drawdown. Right now, we're in the 70s. We're in the low to mid 70s right now. If we drop down to 80%, that's going to put Bitcoin somewhere around 15K. All right. You got to know that. You got to know going in that 15 we could hit 15K. The question is, what are you going to do about it? What are you going to plan, and what are you going to have set up so that if we hit 15K, is that a buying opportunity, or are you going to run for the hills? Right? I think that separates a lot of news traders and opinion traders from ones who have a plan, and their plan includes, at least for the two, for Bitcoin and Ethereum, buying in for me at certain key levels. I want to talk about key levels. So let's start off with a key level that I like to use, which is called Fibonacci. And I thought what I'd do is talk a little bit about the man, the myth, the legend, Leonardo Fibonacci. And so I just grabbed this. I Googled Fibonacci so that I could get a very quick understanding of Fibonacci. Now, Italian mathematician, all right? They have a statue of him, a small statue of him in Italy. I think it should have been bigger. I think he should have been all over the world, because this guy really brought in what we like to call Western mathematics to us, right? He had a book that was I'm trying to remember the name of the book. It was a BC, or it had to do with the abacus. But what he really is noted for is something that we like to call the sequence. Now, the sequence is what I like to call Fibonacci's contribution. It came from a question he had on rabbit reproduction. And the way I understand the story going is that he or a family had rabbits that were in the walls, and then every month the rabbits would grow. All right, the number of rabbits would multiply, and it didn't multiply on a linear scale. And so what he did was start to look at the average count of rabbits month after month after month, and determined that every month they moved up using prime numbers and using a sequence that is now referred to as the Fibonacci sequence. So think about this. One rabbit makes another, and then two rabbits make three, and three rabbits make five, and five rabbits make 8, 13, 30, etc. So you got what's called the Fibonacci sequence. This is the sum of the last two numbers becomes the next. Now, the thing that we like to do is we like to divide those numbers, Eric. And by dividing those numbers, we come to the Fibonacci ratios that I use right here. And Fibonacci ratios, I like to use them from what I call trend low to trend high, and also trend high to trend low. So you pick a low spot in the market, you pick a high spot in the market, you snap a grid that includes the 38% pullback, the 50% pullback, and the 62% pullback. And these become buy and sell levels, right? Buy and sell levels in trends. So this is an example of what a trend low to a trend high looks like. But what is Bitcoin and Ethereum doing right now? So what I want to do is I want to share with you, our price levels. I want to share with you our price levels on Bitcoin and Ethereum. And I'm going to do it like I did last week for the group that was with me in the boot camp. I want to show you the long, intermediate, short term, and then what's happening today. So I'm going to show you some stuff that we talked about in our boot camp a week ago. And then I want to update it to the sell-off that occurred, right? Sunday, Monday. Today, not so much. Today, we'll get a little bit of a rebound. But let's take a look at each. So let's start with Bitcoin. So this is a 300-day chart of Bitcoin that you see here, folks. And this takes us, why 300 days? Because that was the start of the downdraft that takes us from 69,000. Actually, it was 67,549, right? And 10 cents if you really want to add the cents in there. That took us from really the first week of November last year, not even a year ago. We were trading at the high 60s, and we dropped down by the 18th of June. All right, so it took about 8 months, and 8 months we whittled away 73% of value from Bitcoin. Right. Since then, what has happened? Well, in order for us to snap this down, so I look at long-term levels, and the long-term levels look like this. So if you're taking a look at BTC, then what you're going to see is you see the high, you see the low. Now let's take a look at the long-term pull-ups, I call them, pull-ups. So the 38% pull-up takes us to above 37.5. The 50% pull up takes us to 43.2, and the 61% pull up takes us to near 49,000. I know these are numbers right now that, you're looking at Bitcoin, you're looking at it 19,000, and you're saying to yourself, why am I concerned with 37, 42, and 49, right? And those are long-term levels, but I want to share them with you because those are going to be little hurdles that Bitcoin is going to have to get through, right, on its long-term move back up. How about the intermediate term chart? So let's take a 300-day chart and let's cut it in half. Here's the 150-day chart of BTC. And you've got a high that is above 45,000. I've got the low down there just below 19. And then where we are right now. Now, this is last week's chart at 20,168. And where are we at right now? We're going to get to it. It's not that far below when you really think about it. But we've hit this bottom once, twice, 3, 4 times now. We've hit this bottom. I saw the news, Eric, and I saw another headline that said Bitcoin is hitting its lows of 3 months. No kidding. All right, we all see that.
We all know that.
But I don't remember if it was a Bloomberg or CNBC or one of the financial channels saying Bitcoin has hit its lows. I mean, it is really hitting some very interesting support levels right now in the 18s. Because we've gone down to these levels before. In fact, we've gone lower. You go back and you look at June 18th, and you'll see the low was quite a bit lower than the low we hit earlier. It was in the last 24 hours. But now take a look here, and you'll see that these levels change a little bit. 29, 32, 36 on the way up. So what I'm looking for is that move to the upside, because to me, we've been dropping. And believe it or not, there are some people that are short Bitcoin right now. Now, you might be trying to figure out how can you short Bitcoin? Well, it's actually easier than you think, right? There's short selling going on in what I like to call the Bitcoin ETFs, the Bitcoin, again, the derivatives. All right, look at futures contracts. Futures contracts allow people to buy and sell. So just as many buyers, there are sellers. There are sellers that are selling Bitcoin and pushing the level lower. Some of them are doing it to hedge Bitcoin into long, but some of them are speculating that we're going to drop down to new lows. Now, there's also, you can do this with BITO and the ETFs. Here's the thing. Eventually, these shorts are going to get overcommitted. And you're going to start seeing some price action to the upside. And it's going to be like those meme traders that took GME and AMC and the likes higher because they caught the shorts too leveraged. And I believe that we're going to get to a point where bad news is not going to continue to push Bitcoin lower. And all of a sudden, the shorts are going to be looking at their positions and saying, some of them are going to cover at profits. Some are going to jump out and try to break even, and some are going to get caught with losses, because to me, the reward to risk ratio on Bitcoin is severely tilted to the upside. I mean, that's part of the reason why I put 100K into crypto last week and crypto plays. So those of you that were with me on the boot camp, you saw exactly what I did. Day 1, day 2, day 3, day 4. I was all over the place. Some of this was in levels like BTC and Ethereum, and some I went out the Bitcoin and Ethereums, and I went into other microcurrencies, and I even went into some stocks that were Bitcoin related. The thing I'm trying to say is that and guys, my latest buy on Bitcoin. Let's take a look at the chart for the 2 more charts here before I continue. The 75-day chart shows us kind of pedaling around down here just at or below 19. We've gone up as high as 25 and right back down again. Where are we at today? Here are my levels, right? We've got some resistance, some heavy resistance. And this is just looking at the last 3 months, 25,000. Heavy support just below 19,000. It's actually in the high 18s. I call it 19,000 just to make it easy for everybody, because sometimes it's hard to look at these charts when you're on the other side of the screen. That right there, ladies and gentlemen, is why my latest buy at Bitcoin was at 19,000. So I've added to my position at 19,000. The folks at the boot camp saw me doing this, right? They saw me putting orders in last week. But I wanted to let you all know that that's my latest buy-in with BTC. Here's the thing. I'll say it and I'll say it again. Always stick to your rules, all right? No matter what the asset class, and keep your emotions out of it. And the best way to keep your emotions out of it is dip your toe in the water. Don't throw your whole body in. Don't throw your whole body in when it comes to what I call the biggest asset out there, the biggest asset, the most volatile asset out there. Now let's take a look at Ethereum too, and I'm going to move a little quicker here with Ethereum. So you've got the 300-day chart with Ethereum down 73% from its highs, and its highs too were last November, and its lows too were just a few months ago on that fateful day of June 18th when the stock market also hit its lows. So you've got Ethereum from 4810, that's a fib level high, down to the fib level lows just below 1,000, right? Let's take this, let's pull off a small branch, and let's take it from a 300-day down to a 150-day, because my 300-day shows 2452, 2902, 3353, long-term resistance. Intermediate term, we went from 3520 down to, again, 994, and that set up, this is really interesting. You can see 1959 as a 38% retracement. We hit that, and for 3 days we hit that before pulling back. 50% is at 2257, and 2555 is the 61% retracements. These are all intermediate term numbers. We already hit the first one and pulled back from it. Now, I'm looking at this low down here below 1,000. Are we back? I mean, if you look at Bitcoin, you'll see Bitcoin is hitting its low. It's trudging along its low. Is Ethereum doing that? No. In fact, Ethereum, when you look at the 75-day chart, is actually on an upswing. It's gone from 1,000 to almost 2,000 to pulling back into that 61.8% retracement. As you can see, Ethereum, if we look at Ethereum today, looks like this. All right. So when I say Ethereum today, I'm talking about the low to the high and where we are as of just an hour ago. I wanted to snapshot this so that everybody could see exactly what I'm looking at. So you've got that drop down low that took us into June 18th, right? That took us down below 1,000. We stayed around 1,000 level. We actually had it hit it at the middle of June, the beginning of July, and the middle of July. We hit that triple bottom there. Rose off of that and actually doubled in value. If you take a look at, say, August, you take a look at, July. It was about middle of July to middle of August. We saw Ethereum double in value. From there, we've actually had a pullback. We've had a lower high. We've now had a lower low, but we're still well off those lows. So when I look at Ethereum, I'm looking at still today a short-term bullish chart. All right, that's a short-term bullish chart. So if we were to take all of this and summarize it and kind of sum it up, Eric, it really kind of looks like this. This is what I think. I mean, my support levels, crypto itself is hitting different support levels, right? Bitcoin is trying to crack that 18, 19 level, right? But it's just, it hasn't done it yet, right? To me, that has a lot to say. It could do it. Where do we see it going after that? I mean, that 17.5 is, I think, the lows that we saw back on June 18th. After that, you got a round number support down at 15,000. And I didn't just pick 15,000 out of my back pocket, folks. 15,000 actually represents an 80% pullback for Bitcoin. And if you look at the diminishing pullback returns, 88 on the first adoption phase, 84 on the second adoption phase. Well, it would make sense that we're going to pull back to 80. You would think so. But it also made sense that we were going to go up above 100,000 last year, and that didn't happen. And the markets are anything but making sense. Now, if you take a look at Ethereum, all right, Ethereum, I have that 13K. That's 1.3K, folks, right there. All right, let's put it in there. Make sure everybody knows that's what we're looking at with Ethereum. That's a 1.3K level or 1,300 level. Right, is where we're looking to hit the low 13s. That is a 62% Fibonacci retracement off of the lows that happened below 1,000 to the highs that happened above 2,000. Oh, by the way, Eric, you know where
Yes, Tom.
my buy is on Ethereum? My next buy on Ethereum?
I have
I'm going to
no
give it
idea,
out
but I want to know. What is it?
right there.
1,000.
1,000, because I'm already in Ethereum at in the sweet spot here, where our and the folks that were with me last week, we jumped into Ethereum as well. But my next my limit, all right, we get back down to 1,000. I'm buying into it, adding another unit of risk, a unit of investment into Ethereum. So I wanted to share that with everybody too. So that number right there, if it goes down, a lot of people are going to be upset, Eric. A lot of people are going to be crying. Those that bought and they thought they were buying simply because they thought the merger was going to take us to new highs. And we've pulled off. This has been a sell the news event. But that's okay, because I'm happy to take that, a small portion of my trading account. I'm happy to take that and add that to Ethereum if we go back down to those levels. So, again, and just talking about the last two pieces of our summary, that, crypto's being punished right now. I think more so than it should be. If you take a look at the headlines, I mean, people got to write headlines. Publishers got to publish. If they didn't, they'd be out of a job. So they're going to publish. And when they see something move, they're going to try to figure out the why, because publishing is all about the why. Why did crypto go down? Why did Ethereum go down? Oh, it went down because, folks, there's only one reason something goes down: because there are more sellers than buyers. There's only one reason things go up: because there's more demand than there is supply. The why just adds to confusion, it adds to emotion, and it adds to losses. If you fall into that trap. Our trading mantra, I'm throwing it on the screen right now for everybody. This is what we do with our cryptocurrency positions. This is what we do with, and I say we, I'm talking about my team and I, right? We do this with stock positions. We do this with option positions. We do this with crypto positions. We spot rules-based opportunities. What in the world does that mean? We are pattern traders. We trade patterns that happen over and over again. It doesn't mean that I'm guaranteed that the pattern's going to work, but that's what we do. I'm thinking of a seasonal pattern in my head right now that I put on a couple weeks ago with our Fast Fortune Club, and now we were selling gold. Right, we were actually on the bearish side of gold and GLD. Hey, that worked out great. In fact, I had limit orders in to get out at profit targets, and they just happened. And then I was kind of reminded of it today, and I'm like, my gold put positions weren't even in my account. Well, where'd they go? Well, they went out at profits, and they actually went out at profits last week. I just happened to miss the profit taking that went on, but it was there, and it was there because we put these orders in ahead of time. That's spotting rules-based opportunities, creating, again, acceptable risk and or high probability trades, and then finally planning, executing, and managing these trades from start to finish, right? So we do that in all realms of what we're doing with not only stocks, but cryptocurrency as well. So, Eric, before we roll out of here, as we're getting into the last few minutes of our time together today, I thought maybe what we could do is, you got a couple questions that have popped up when it comes to cryptocurrency. So why don't you throw those up? Let's have a little discussion on them.
All right, Tom, how about this one to start? You've talked a little bit about Coinbase Pro, how now you could do it all on Coinbase. So they're asking you about your personal position here. Did you close your Coinbase Pro account, Tom?
Well, before I answer that question, Eric, do you use Coinbase?
I use Coinbase Pro. I never went back to Coinbase just because I've been doing a lot less than I did 6 months ago. But
right.
I still do have my Coinbase Pro account.
Man, you and everybody else. That's another story that I want to discuss, and maybe I'll bring that up tomorrow. Is the amount of volume that has dropped on cryptocurrency, and how that's affecting a stock like a Coinbase. But I use Coinbase, and to let member 2713 know my answer. I've used Coinbase. I've used Coinbase Pro. I've had Coinbase since 2014, and I've had Pro I don't remember when I got into Pro, but it was not long after they launched it. And it was actually it was called something else before it was Pro, because Pro was somebody else's platform and Coinbase bought it and integrated it in. And the main reason that me and everybody else used Pro is because the commissions, the fees that Coinbase charged were substantially less in Coinbase Pro. Now, what happened a few months ago is that Coinbase took their Pro platform and integrated it in to Coinbase. So they call it advanced trading. So if you go into Coinbase, you'll see their trading where you can pull from a bank account, but they have their advanced trading that allows you to do limit orders, stop orders, and things with the cash that you have on hand in that Coinbase account. So if if you have US dollars, or if you're swapping one coin for another, you can do that in Coinbase Pro, and it gives you a little bit more control. But here's the thing that also happened, that you don't have to worry about with Coinbase Pro anymore. Those commissions, those discounted commissions, are happening right now in Coinbase. So I closed my Coinbase Pro account. I moved all my tokens and any cash I had on hand right back into Coinbase. It was a simple wallet transfer. That's all it was.
And that's easy to do.
What else do you got for me, Eric?
We have another question.
Maybe one more.
This is interesting. A new member. I have 3 Ethereum coins valued around 10,000. First of all, I'd like those Ethereum coins, because that's more like under 5,000 right now. But who knows? Is this amount I should stake? Do you suggest staking any amount? I know you're not a big staker yourself. I know that Nick does a lot of staking. But what are your thoughts on staking 3 Ethereum coins?
Well, on staking anything, I do think that staking has its place out there. You can grab some extra interest, especially if you plan on holding them. If you have a long-term plan, then I think staking makes a lot of sense. It's almost like a covered call, all right? But you don't have to give up the coin. You're basically loaning it out and lending it out to the grid, so to speak, lending it out to the blockchain. Eric, what is your thoughts on staking? Do you stake?
I do stake. I don't stake my Ethereum because of all the stuff going on with Ethereum. I just wanted to just have it and be able to get rid of it or do whatever I wanted. I stake things like Fetch. I stake Cardano. I stake Cosmos. Those are probably the 3 biggest ones that I stake. But they're things that I'm going to be holding on for the long term, and I'm getting good returns. So I think on my Fetch, I'm getting 10%. I know I'm not selling that for 4 or 5 years. So I'll earn those coins. Cosmos, I'm getting 15%. So, I'll take those rewards with no intention to sell.
Yeah, and that makes a lot of sense, folks.
Yeah.
All right, so I hope that answered a couple of crypto questions we had out there. Tomorrow's show, I am going to dedicate it back to crypto again. And what I want to do is I want to talk about some of our systems and strategies that we use, such as currency waves, as well as what we like to call our darknet design that we've developed and back tested and traded with a lot of success. So I thought I'd show you a little bit of what goes on under the hood with our microcurrency trader. So I'll see you guys all back here same time tomorrow, same place tomorrow, and ahead of the Fed. See you then.